This is ShadowQuant, Market Brief, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Monday, August 10, 2026, and this is the After Hours session. Now, let's get into it. The S&P 500 and NASDAQ closed higher today, defying a fear and greed index reading of 14 out of 100 and a VIX that remains compressed at 14.90. As geopolitical tensions escalate with reports of missile activity near the Strait of Hormuz, markets are pricing in resilience while the yield curve flattens and central bank rhetoric turns hawkish.
Let's look at the closing numbers. The S&P 500 tracked by SPY finished at $773.26, up 0.61%. The Nasdaq 100 tracked by QQQ led the charge, gaining 1.17% to close at $723.03. The Dow Jones tracked by Diamonds was the laggard among the majors, rising just 0.27% to $539.62. Small caps tracked by the Russell 2000 ETF IWM also outperformed the Dow, climbing 1.11% to $301.56.
With tech leading the rally, we turn to the corporate flow.
In corporate news, we are seeing significant movement in the mining and crypto infrastructure space. Core Scientific reported fourth-quarter results that disappointed the street, sending the stock lower. Meanwhile, Bitdeer announced a near five-fold increase in Bitcoin mining output for the second quarter. In the broader crypto space, Tron USDT supply hit $87.9 billion, with transfers reaching $2.1 trillion in the second quarter, according to Messari.
From corporate filings to the macro backdrop. The macro picture is defined by a clash between growth data and inflationary pressure. The latest Federal Reserve data shows the Fed funds rate at 3.63%. The two-year Treasury yield is at 4.19%, and the 10-year Treasury is at 4.65%. The yield curve, measured by the 10-year minus 2-year spread, is at positive 47 basis points, though the data notes a flattening trend, which is often viewed as a caution signal for growth. With the macro data in focus, let's check the risk desk.
There is a notable divergence in risk signals. The VIX, a measure of expected volatility, is at 14.90, down 0.25 from the previous session, indicating low expected volatility. However, the crypto fear and greed index is at 14 out of 100, signaling extreme fear.
That divergence between low equity volatility and extreme fear sentiment sets the stage for the week ahead.
Here is what to watch. First, the VIX remains at 14.90 despite the extreme fear reading in crypto and equities. If the VIX fails to rise, it suggests the market is underpricing the geopolitical risk from Iran. Second, the Nasdaq 100 is leading with a 1.17% gain, but the yield curve is flattening and inflation is sticky at 3.46%. The disconnect between tech strength and macro caution is the key dynamic to monitor.
If you're finding value in this analysis, support the project at patreon.com/ShadowQuant. Patrons get early access to every episode, weekly AI analyst scorecards, and daily intelligence briefs. And if you're listening on Spotify, Apple Podcasts, or YouTube, hit that follow button and leave a rating. It helps more traders discover the show. We appreciate you. This is an AI-generated market briefing by ShadowQuant. All information is for educational and informational purposes only. It does not constitute financial advice. Always do your own research before making any investment decisions. That wraps up this edition of ShadowQuant Market Brief. Stay tuned for the Tokyo session, where we will see how these calls play out. Until then, trade safe.